Hey Money Movers, welcome back to Millennial Money Moves with Nadia. Before we get started today, please don't forget to hit the like button, subscribe button, and turn on that notification bell. You guys know the drill. It really helps me with the algorithm and help pushing my videos out there. I'm going to be doing this full time, so you guys are going to actually be seeing a lot more of me consistently. I had a lot going on. I'll probably be doing a life update video soon, just to let you guys know a little more about me and what's been going on. But for now, I wanted to talk about inflation and what I'm kind of doing to combat that. I've been really more heavily investing into dividend stocks, and I'm actually going to be starting a dividend portfolio, and I wanted to talk to you guys about that whole thing and sort of walk you through the process of what I've learned. So let's get started.
So Nadia, what's up?
We making money moves.
Who making money moves?
We making money moves.
You making money moves?
We making money moves.
We making money moves.
We making money.
Welcome back. Happy Good Friday for those of you who celebrate. It's Friday, so I'm a little more casual dressed down. I was like, please don't mind my hair or my appearance, but I have lots of information that I want to share with you guys. Clearly, inflation is a big problem. You know, we saw it raised from 7% to now, I believe it's 8.5%. And CPI rates are high. We knew those numbers were going to be high just from gas prices alone last month, and the price of crude oil is obviously putting those CPI numbers up even higher. And for those of you who don't know, because you know I don't like to just throw out terms without explaining what they are and what they mean, but a CPI is a Consumer Performance Index, which is just a fancy way of saying they take a look at how much we're paying for services and goods and kind of put that all together, you know. So gas prices, because they were so high in March, that's a big part of why CPI numbers are so high. That report came out, I believe, April 12th. I want to say I just read over it today, but the numbers came out a while ago. And I just wanted to address that because, like I said, you know, inflation is terrible. Everybody knows that, whether it's groceries, shopping, going out to eat. Nothing kills me more than Uber Eats and their fees, their little temporary fuel surcharge. Yeah, this is why I had to delete that app off my phone. It's just wasting too much money getting food delivered. But anyways, like I said, you guys know I'm new to investing and I just kind of started recently. It's been a little over a year, but I have learned a lot in a short period of time. But I never want to come off as an expert or like I know everything. I mean, right now with inflation rates, this is like a 4-decade high or something ridiculous. So even in my lifetime, I haven't seen inflation this high, let alone since I've been investing. But what I did learn is as share prices are going down, dividend yields go up for the stocks that give out dividends. So like I said, I have 2 stock picks for you guys. I'm going to be starting a dividend portfolio. And if you guys saw my last video, if you haven't seen it, go check it out. But I gave out some stock picks on there that I'm going to be adding into that dividend portfolio. And I'll do check-ins and kind of show, you know, how it's performing over time with you guys, because I think it's a good idea. You know, I have talked about dividends before, but more so Coca-Cola and just random ones here and there, not too many, but I want to add a couple more and, like I said, have a dividend portfolio. This isn't the only thing I'm doing to combat inflation, but it is one of my methods. It's something I'm doing, so I wanted to come on here and talk about it. So with all that being said, you guys probably want me to get started. So let's talk about how to choose good dividend stocks. And don't mind me if I'm looking over, it's because I'm looking at my notes. It's kind of been a minute since I've been making videos consistently, so I'm kind of trying to get back into the swing of things. So to those of you who stayed with me through all this time, even when I took time off a few times, thank you. I truly appreciate it and would not be here without you. I can never say thank you enough. But dividend stocks, so it's kind of similar to when I just do a regular stock analysis. You know, you want to look for good earnings, you want to look at good growth rates, but most importantly, when it's dividends, you want to look at how they've performed historically and how they're doing compared to competition. You want to look at their dividend yields. You know, are they known to cut dividends? Are they pretty consistent? That's really important for me when I'm picking stocks to put in my dividend portfolio. And I'm not just picking ones that have really high dividend yields, but aren't that good of companies. These are companies that I would want to invest in as well, if that makes sense. Another key thing I look at is, I already said good cash flow, but a low debt to equity ratio. That is important here. That's important always with investing, but especially for picking dividend stocks. Nothing is more important than, I already said though, their dividend payout history. You really, really want to make sure that when you're picking stocks for a dividend portfolio, like I'm doing right now, that they have a good dividend history. I mean, that kind of goes without saying. Now, if you're making a dividend portfolio, look at how their dividends have performed, their history with dividends in the past. So the first one is ticker symbol INTC. That's Intel. You guys know the chip company. Now, you might be kind of surprised by this pick, but I actually think it's a good company. Right now, their dividend yield is 3.20%, which usually other picks I will have, it'll be 5% or higher. But for today, I just like these companies, and they do give out dividends, so I wanted to include it. Right now, the stock is sitting at $45.67. That's their share price. And we're looking at a 15% upside in just a year on tip ranks. Now, this play I actually think is going to be a long-term hold. And when I say long-term, I mean long-term, like 5 to 8 years. I believe that this company has a lot of potential to grow, especially down the line. But I'm going to go into a little more detail about why I picked INTC. Now, like I said, this might come as a surprise because they actually had been losing to one of their competitors, AMD. And typically with dividend stocks, you want to pick something that is very strong competitively and is beating their competitors. But this is kind of a different case here as to why I picked it. I think in the long term, they're going to do really well. So if you're a more cautious investor and you're low risk, maybe this isn't the play for you. And that's okay. Not everything I talk about is something you have to get into. It's not financial advice. This is literally just me telling you what I am doing. And this is one of those choices here, because I know this is it's not super risky, but it's definitely one of my riskier plays. And it's on my watch list for now. I'm actually waiting for it to get a little lower. I think that would make me a little more comfortable. I do think anything under $47 is a good price. But, like I said, I think would just make me a little more comfortable if I got it a little lower. So I am going to be keeping a close eye on that. If you guys don't already follow me, I made a new Instagram. The links are in my description box below and on my channel. And I have a new Twitter account where when I'm doing something like this and something is on my watch list, I will be tweeting and posting on Instagram, so you guys have that alert immediately of when I'm buying. Because, let's face it takes a while to record a video, edit, and upload. And I want to be able to give you guys these plays like right in real time as they're happening. And so, like I said, this one is going on my watch list. I'm looking for it maybe just a couple dollars lower. If I can get it at 43 or 44, that would be amazing, because I do think that would be getting a good company at a great price, because there's that 15% upside even for the next year, but I think there's even more potential to grow way down the line. Now, in 2021, their performance did bring down their growth rate a little, but I really, really like their 2022 long-term growth strategy. I'm seeing lots of potential there. And this is all takeaways from my own stock analysis. I've talked about some resources that I used before, but I go on TipRanks, Yahoo Finance, Seeking Alpha. I look at the company, just their earnings reports and things like that, and it really helps me make a decision. For those of you who are wondering how my source is not trust me, bro. Okay, don't worry. I'm not just gonna say something with without having a valid source. And so they came out with a report showing that earnings are going from $4.86 a share to $3.55 a share. So again, this is why I said, you might think I'm crazy for getting this one, because no one wants to hear that their numbers went down. But according to my analysis, I do think that this stock is a little undervalued now, and it has lots of potential in the future. So I am going to try to make this play and get in on a really good price for what I think is a good company. I think they're a good company overall. And again, like I said, if you're a very low risk investor, this might not be for you. I'm putting it on my watch list, and I think I will be, I have to see how it does in the next few days, but most likely adding this to my portfolio over the next few days when the market reopens. But my second pick is a little less risky. Again, this one is on my watch list for right now too, and I'm going to add it in at what I think is an ideal price for me. But my second stock pick for today is Starbucks. And I think I've talked about Starbucks before on my channel. If not on my channel, I know I've posted about it on other platforms. But I thought this would be a good one to add into my dividend portfolio because I have a lot of faith in this company and I like their dividend yield. It's not very high. It's 2.47%, but I think that Starbucks is a good company, which is why I think this one deserves a spot in my dividend portfolio. So their current price is $79.50, and it has a 41% upside. And so I think that's good. I think it looks very promising, and so I'm going to get into a little more detail about why I like Starbucks. So in fiscal 2021, they opened 173 new stores, which is a lot for fiscal 2021. I mean, Starbucks is $1 billion company. This doesn't really surprise me that they opened so many. And even for fiscal 2022, they've opened 484 new stores. I have to look at the numbers, so many to remember. But that's a lot given that it's only April. So I think that Starbucks is going to have a lot of growth in the amount of stores they're opening. And that's kind of how Starbucks, because it's a good, people generally keep coming back for it. And they have such a strong brand that people even associate Starbucks just when you say coffee. Like their brand marketing is great. And I think because they have so many different stores and so many different locations, there's even Starbucks in my local Target. I might be going to Target to shop, but then I end up buying a coffee just because there's a Starbucks right there. And I think that's how it is for a lot of people who buy Starbucks. Because there are so many and it's so convenient, they're getting a lot of customers and they're getting a lot of repeat buyers. People are very brand loyal when it comes to Starbucks. We have 34,317 stores in total. Like I said, this is $1 billion company. They have a large market cap. I'm obviously a big fan of that. And their growth rate is just so high. And even their dividend growth rate is high. When you look over historically how their dividend yield has grown, I think that Starbucks is a great investment. And even if you're just looking at that dividend growth, like I mentioned, I think Starbucks would be great just for that reason alone. I have more reasons than that. I wouldn't get in a company just because of that, but that is a contributing factor here for sure because this is my dividend portfolio. I am keeping it on my watch list because if I can get this company at a lower price, that would be great. This is a really great company if I can get it at a low price. I really like the upside I'm seeing. I'm not sure how long I plan to hold it because I do have some in my super long-term portfolio already. But this is kind of something new. I'm trying a dividend portfolio. I've never done it before, but with inflation looking the way it is right now, I thought it would be a good idea to test something like this out. And aside from 2020, because they really struggled during COVID, their net income, their cash flow has been great. Now they did have more debt to cash on their balance sheet, which is obviously never exciting news, but when their cash flow is as high as it is, I think that's enough to, I don't want to say overlook, but almost overlook that debt to cash ratio. Because they're such a profitable company and I really like their plans for expansion and I like that they give out dividends. Now I am paying attention to their coffee prices with, like I said, CPI numbers being high and inflation being ridiculous. I want to make sure that their coffee is still staying in a price range where they aren't losing out to their competitors. So I think something like that is super important when you're looking at companies like Starbucks. Make sure they keep that advantage when they are leading with the amount of people who buy company, the money in there. Starbucks already has so many people who are buying coffee, if that makes sense. I feel like I worded that kind of weirdly. People are just very brand loyal to Starbucks. The people who are buying coffee, a large percent of them are already buying at Starbucks. And something like that is very important when it comes down to companies that you're investing in. You want to have repeat and loyal customers, good brand strategy, good cash flow, good plans for expansion, good plans for growth. Now, what makes people a little hesitant with what this is a buy right now is that they're 30% lower than their all-time high. But with all their plans for growth, I don't think that this is it. This is as good as Starbucks is going to get. I think they still do have lots of room to grow, and I think they will continue to grow as a company. And so I believe in it. I'm invested in it. like I said, it's in my dividend portfolio, and I will be checking in with you guys. I don't know if you guys invested in dividend stocks? Let me know in the comments below. I really like talking to you guys, so please comment just what your thoughts are in the video, what you think about me doing a dividend portfolio, you know, things like that. I'm just curious to hear your thoughts on everything. So again, that's two stocks. That's INTC and SBUX, Intel and StarBucks. They're probably two companies you've already heard of before, but why not invest in the companies that you know of if you think that there's promise for them in the future? Again, I will be making more videos soon. And next, I should be making a video on everything that happened with Elon Musk and him trying to buy Twitter. I talk about Elon Musk a lot because I talk about Tesla a lot. It's a great stock and I love it. Elon is a really unpredictable guy. He's a bit of a firecracker, and I definitely want to make a whole video on what I think would have happened if he bought Twitter, why they didn't want him to buy Twitter, and what they're doing to prevent him from buying it in the future. I think all that stuff is just interesting and really important to know as an investor in case you see anything like that happen again. But that's everything that I have for you guys today. Again, please don't forget to like, subscribe, and turn on that notification bell. Help me help you. But again, I'm not a financial advisor, and if you ever see anything about a WhatsApp, that is a scam. Do not trust it. I'm never going to message you and ask you for money. There's also been fake Instagram accounts, fake accounts of me, but the links to all of my accounts are going to be in the description box below. So go ahead and follow me over there, and I will be alerting when I'm buying Intel and when I'm buying StarBucks. But have a good one. Happy holidays. And remember, we're making money moves. Bye.